this roundtable discussion. The subject, as you all know, is very important, and it's on the recent discussion paper which has been circulated by IBBI on the subject of voluntary liquidation process regulations 2017. Certain amendments concerning the timelines and the compliance certificate have been proposed. I'm especially grateful to Ravi, Prakash, Ganti sir for agreeing to moderate the discussion. And I'll just take 1 minute and very briefly introduce sir. Sir, as you would all know, is an insolvency professional and of repute. Just give me a second.
Skip the introduction, not important. Let's get on to the business.
Just 30 more seconds. So, sir is an insolvency professional, you would know. Sir is also a director at Resolve International Private Limited. Sir has held very high illustrious positions in several big organizations. Let me skip those names of the organizations. In terms of qualifications, sir is a BTech from IIT Kharagpur and an MBA from XLRI Jamshedpur. Currently, also sir is pursuing LLB from Padma Shri Dr. D.Y. Patil College of Law. Sir has not only been an insolvency professional in several assignments, but sir has also mentored and advised different IPs in their assignments. In terms of association with us, sir is our insolvency, sir is our professional member, and sir has also been our faculty in several PREC programs, roundtables, and workshops. So I would now straight away request sir to kindly start the session. Sir, over to you.
Thank you, Nitin. Thanks for that. So let us get on to the business at hand today. The discussion paper, we will take it for granted that at least people have glanced through it, if not studied it in detail. This is about the voluntary liquidation regulations. Among all the different types of IBC processes, probably these regulations have been touched the least compared to the CIRP or liquidation. The objective here is very simple. It is ease of exit. Okay, ease of doing business. We have heard. We are talking here today of ease of exit. There are 4 propositions or proposals made in the paper. I do not expect this to be of much controversy as such, but still there would probably be viewpoints to be considered and maybe certain issues to be taken into account, especially in putting them into practice. So without ado, we will straight away go to the first point that we are talking of. See, what are we here looking at? These are the objectives which are being sought to be achieved. First is improving the ease of exit by slashing the timelines for various activities and for the entire process under certain situation. Okay, not all situations. So the discussion paper talks of 2 different types of situation where different timelines will be there. And also to provide for improved reporting so as to enable the adjudicating authority to decide matters expeditiously. We all know that in voluntary liquidation, the role of the AA comes only at the end, but even that is sought to be fast-tracked by making it easier for them to take a decision. So we will straight away go to the first question that is being sought to be addressed. Okay. Yeah. So the first proposal is relating to preparation of the list of stakeholders. And what is proposed here is to reduce the time allowed in a no creditor situation. That means the background behind it is that voluntary liquidations need not necessarily have creditors. In many cases, they will just be because the company wants to seize that particular business, or maybe the business which it had formed this company for has come to an end and everybody else has been paid off in normal course, and it is just a closure and dissolution of that. So there could be many cases which is no creditor claims. That means there are no creditors in the company except for the shareholders. So the first proposal is that the time allowed for preparation of list of stakeholders to be reduced in a no creditor claim situation from 45 days to 15 days. So what we will do is the model each question we will put it up for discussion, and all the viewpoints that are there, we will take note of that. Okay. So point number 1 is put across to the floor, to the body, to comment upon.
Yeah,
Reduction in timeline. Yes, Dr. Rao, long time.
Very happy to see you. Thank you very much, Nitin ji, for sharing the link. And Ravi Prakash ji, very happy to see you once again on this floor. I just want to correct me if I'm wrong. The word stakeholder is a larger one as per the definition in the regulation, which includes not only creditors but other claim holders also. For instance, if a organization includes ESI claims or PF dues or regulatory dues, the moment you are giving public announcement, they are coming back with the claims. So my understanding as per the regulation, the stakeholder definition says entitled to process the sale of liquidation or something else. So this type of authority is also coming under the purview of this stakeholder definition. If that is the case, this 45 days is reasonable. We should not go. And moreover, if there is no stakeholder anyway, voluntary liquidator is always looking to complete the process and file the petition with AA immediately. So this is what my understanding. So if the stakeholder definition includes this type of things, then it should be 45 days. Otherwise, we can reduce 15 days, as you rightly said, if the only creditors is the thing. So over to you. This is what my suggestion.
Just to clarify, the word creditor includes all types of creditors.
Okay.
It includes the operational creditors, government dues, everything. So by it's not just financial creditor, it is both FC, OC, and other creditors.
Correct, because couple of cases are happening before AA, and it was delayed only because of these other creditors, which are especially statutory dues. They are coming the moment in 1 or 2 cases, even in spite of dissolution order, also they filed IA and they called, and it was reversed also. So this part, our discussion purpose is on the whether to reduce 45 days or not. If that is correct, then
if no claims are received, then 15 days. If even one claim is received, 40 days.
Yes.
45 days is not mandatory, sir. The liquidator can close
Before
that also.
Okay. Just to give the background behind it, you know, we are very good Indians. So we never do anything before 11:59 p.m. Okay. So what the regulator has realized is, bhai, humko thoda danda dena padta hai, so crash the timeline. So that they can, now you can be questioned. Earlier you could say, okay, I still have 1 more day, 44 days it over. Now you have to say, no, I got only 1 more day, 15 days. So it is only for that, to speed up where possible, but not impose it when it requires. So 45 days, the standard will remain, even if one claim of a creditor comes. But if there are no claims, I mean, those special purpose vehicles which are set up, let us say, by foreign entities or for doing a particular project, everything has been done. They would have taken care of settling all their claimants of whatever nature and then going through the motion. In such cases, it should not take time. You know, statistics also, it looks good. Okay, so many cases filed, so many disposed of. Okay, so that is the background behind. Yes, Pranavji, boliye.
Yeah, this is pretty much achievable. 15 days are more than enough.
So,
Dr. Rao,
Yes,
your
15.
mic is on
those who have
mute.
completed CRP process, they are very much habituated for these 15 days. They are already familiar with the CRP. But those who have taken first time voluntary liquidation, for them it creates unnecessary pressure, unbuilt pressure, because voluntary liquidator 45 days may at any time he can close. There is no such thing, minimum cooling period or minimum opening period. So anyway, just
no, this is only about the first step, that is preparation of list of creditors, nothing more than that. Okay, yeah. So that basically you can say that in a way this is fast track voluntary liquidation. In a way, okay, where the number of claimants in fact will be 0 and everything else should be done faster. Yes, Arunji, you wanted to say.
Yeah, I just wanted to add that yes, 15 days actually will start
after expiry of 30 days from the date of public announcement, which is like the
Yes.
claims are received.
Absolutely.
There is, because it's not only a list of creditors, it's actually a list of stakeholders which we supposed to prepare as a liquidator. So sometimes it happens, because when I say stakeholder, the stakeholder even includes shareholder also in case of a voluntary liquidation, because they are also one of the claimant to get the surplus money left in the company post distribution to other stakeholders. So most of my suggestion actually during this whole discussion will be concentrated towards wholly owned subsidiaries or subsidiaries of foreign companies. Normally, when I read this suggestions, so I find that there will be a lot of troubles for those companies which are actually subsidiaries of foreign companies, because here also we will receive claims as a shareholder from holding company who are the actually holding company, foreign company who are the shareholder of this company. Sometimes they even take time more than 30 days to send a claim to us, not because they don't have papers. It is because I always insist that they should send it apostilled and notarized document whenever they send it from the home country. So 15 days is sufficient to process, but sometimes 30 days, they cross the 13 days. But as a liquidator, we take that call, because at the end of the day, even if claim is filed after 30 days, but still we have a right to accept the claim beyond the threshold period. So I'm fine with processing, because there is a specific clause which says that no creditor. If no creditor, that means the processing time for liquidator is reduced from 45 to 15 days, which is fine, which is anyway somebody will know before the commencement of the process.
Yeah.
So that is something which will happen, but I don't think that even if we'll reduce it, it will change the claimant timelines to file it. That is not even proposed here. That's fine.
No, that's not. That 30 days remains. Absolutely. Yeah. Anyone else has anything to say?
I just want to add, I really appreciate, I missed the name of the gentleman who spoke right now.
Arun Gupta.
Arun Gupta.
Arunji, you raised very pertinent question where the practical and administrative issues are happening. If you see Hague Convention, upholsteration with even public notary in that Hague countries also may be accepted based on linking as a liquidator, taking the cue from that actually. But anyway, you are rightly pointed out, for the case of foreign subsidiary companies, it definitely is going not only 45 days, more than that also. So a rider 15 days, if you are giving, power to condone may be given to the stakeholder committee or contributor committee. With that rider, he can place before the liquidator, so that 15 days will be there. At the same time, cushion will be there for the liquidator. Instead of going to AA for something else, he will place the list of stakeholder and he will amend. If anything is subsequently comes also, he will have a power to condone through the committee and again place subsequently amended list also. Like that, we have to go and at the same time balancing the situation.
In voluntary liquidation, the AA has no role till the application final report is filed. So it is between the liquidator and IBBI largely. So as long as you are able to satisfy the boss, everything is fine.
Only stakeholder committee role and contributor role was given for the reports and other things actually. Especially beyond 12 months, there is a power to go to the stakeholder committee. Anyway, sir, I think more or less we agree.
Any other comment? Anybody else? That's it. So we will move from here. So we can say that largely, yes, there could be issues where, let us say, foreign claimants are involved, and if they take a little time, but one would assume that those will be exceptions and will be dealt with accordingly. But let me just, if you read the discussion paper, the voluntary liquidation process is board and shareholder driven. It is not a third party process. Okay, which means that all those shareholders have actually decided to do this, which also implies that they should be ready with all the documentation required. In fact, one would expect in a good situation that on day one, all the shareholders have filed their claims first before anybody else. Okay, that apart. Let's go to the next question. Okay. Yeah. Now, this is, of course, the next step is distribution period. The distribution period in the regular liquidation had been reduced by way of an amendment to 90 days. But it remained same in the voluntary liquidation because the regulations had not been touched. Now, the board proposes to drastically reduce it from 6 months to 30 days. Okay. Again, the thought process is the number of people eligible to get this distribution will be limited. They will all be known beforehand. not likely to be too many claimants or litigations in voluntary liquidation. That is these are assumptions, okay, which one would say are true for the majority cases. So almost everything goes by that principle, that in majority of the cases, this is likely to be the situation. So the distribution period now for the liquidator is, as soon as you realize the money from sale of asset, you have to distribute it within 30 days. Okay. So any comment?
May I?
30.
Yeah.
Okay. So here the first question will arise that from where we will start this 30 days. So the language is from the date of realization.
Yeah.
You know, normally in voluntary liquidation, normally in most of the cases, there are the bigger chances that there are no assets to be realized. Generally, cash balance, bank balance are there in the books, which are going, people will distribute to the stakeholder, generally the shareholders. So say a liquidator started liquidation. From the day one, when the liquidation got started, there is a bank balance of say X amount of rupees. So is that 30 days going to be started from that date itself, because bank balance is there in the bank to be distributed to the shareholders? If that is the case, that is the case, then 30 days is not achievable at all.
I don't think so, because I think for everything, the time period will start after the list of stakeholders is filed or prepared.
Okay.
So, okay. Till that time, it is not yours. The moment you prepare the list, you can say, yes, the cause of action has happened.
Maybe can we suggest here that the date of realize, because say I'm voluntarily liquidator in more than 8-9 companies. In all such companies, generally there are no immovable assets, some movable, receivables, and bank balance. So receivables will in any way will be realized, but bank balance is from the day one. So can we say that this period will start after finalization of list of stakeholders, or maybe after expiry of 45 days or something like that?
No, finalization of list of stakeholders is a necessary condition in all liquidation before
in all liquidation, right?
Yes.
Right.
So that is a standard. It is whether it is regular liquidation or voluntary. You cannot distribute unless you have a list of stakeholder which is first made.
Obviously.
So that is understood.
So that means I understood. That means this period will start after say finalization of list of stakeholders.
Right. Absolutely.
There also, I'm raising it here, but anyway, this will fall another point, another way also. Maybe other London members are also in the part of this. I would like to hear from them also. I always find problem in opening a liquidation account with any scheduled bank. Many a times, even a liquidation account also not get opened within a period of say 3 months from the commencement of liquidation, 4 months from the commencement of liquidation. There it is the biggest challenge. If you don't even have a bank account, how will you distribute it? So we should solve it before reducing the period to that extent.
Yes, valid point, and many people have faced. Pranavji, boliye.
Yeah, it's a very valid point. We have done banking with so many banks, except 1 or 2 banks. My experience also says that the bank account opening itself takes on an average more than 2 to 3 months. So in that case, can we distribute the money from the existing account, not the liquidator bank account? Because the liquidator bank account has not got opened due to banking difficulties. So can we count 30 days and distribute from the...
There also, Pranavji, there also the problem always arises that those bank accounts are being operated by the directors.
Yeah.
Then obviously you will have to ask them, ask them to sign the checks or become signatory to those distributions. Because I tried both, like opening of account, even change in signatory and nomenclature of the existing bank accounts. There also banks takes their own sweet time. It's not a much. I wrote hard letters to the bank saying that I have all the authority under the law, being a liquidator, and you as a financial intermediary, you have to follow what I am saying. But sometimes even they don't issue the bank statements to me.
I know.
They don't issue them. And this is not a problem in voluntary liquidation. It happens in CIRP and other also.
Yeah.
Yeah.
Hello.
Very common problem. Yes. Yes, Mr. Kumaraswamy.
Yeah, I'm speaking from Bangalore. I handled 2 voluntary liquidations. See, the main problem with bank, see, all these accounts are current account. Bank is not obligated to pay any interest. They will enjoy 3-4 lakh rupees remaining in the account for 6 months or 8 months. They will not transfer before that. The problem every month, very happily they keep on debiting 800 rupees, 1000 rupees bank charge. So they're very comfortable. The moment you write a letter, I've taken over as a liquidator, they will start giving all this problem. In one or two banks, Canara Bank and Axis Bank. At last I asked, do you expect any bribe? Then at last, after fighting to such an extent, I could able to get, because for example, any bank, they will not come forward for opening a liquidation account because it's a dying business, just distribution. So under the circumstance, when bank takes 8 to 10 months time just for transferring the amount from one account to other account, how this 30 days will play a role? That is my question.
Valid point. I think we will take note of that.
Sir, please, because the moment this will become a regulation, then I'm sure every liquidator will have to give some reason in his final report that why he couldn't distribute within 30 days time. And in most of the cases, it will be the bank. Because at the end of the day, if money is there, then liquidator will also like to close the assignment instead of holding it for it.
Second.
Excuse.
Yes.
I just want to share.
Yeah, Pranav, please go ahead.
Okay. Sorry. My second issue with regard to this 30 days also, and the next point also, where I need to give 90 days or 270 days report.
We will come to that.
So I'm linking this also, but I'm just touching one line, and then we can discuss. Is that there are situations where that cash is lying with me, there are no claims received, but that there are some proceedings pending. So there could be some liabilities which could be accruing in the future. Then how would you distribute?
Okay, we will come to that.
Yes,
because that's a very tricky question, and
yeah, I faced.
Not supposed to be there in voluntary liquidation is a presumption, not always valid. We will come to that. Very important.
But
okay,
anyway,
Mr.
I also
Panikkar, you wanted to say something,
Yeah.
Mr. Panikkar?
No, I was just taking up the same subject about this bank account opening. My personal experience also has been it takes anything from 3 to 6 months, depending upon how pushy you are with. As a matter of fact, in my case, in my last assignment, I used to be the CFO of a public limited company and know some of these bankers. Even then, it takes time. So I can very well understand the mess it is.
Yes.
That's all.
Yes. Mr. Sarawgi.
Yeah, regarding the distribution, the problem, we face the problem when the shareholders are non-resident, because you have to comply with the formality with the bankers for the authorized dealers, and the authorized dealer put so many conditions. They want to get the process checked, whether everything is as per the FEMA or not. All those things they want to get assured. So it takes time. So they are appointing advocates also to get the report whether the process were taken properly or not. So it also takes time. So that period should be, basically that is not in the control of the liquidator at all.
Exactly.
Right. Absolutely.
No foreign remittance can be made by any authorized dealer in less than 30 to 45 days if everything is complete. Like, because they took, apart from opening of bank account, when we are talking about distribution, even when you'll apply to authorized dealer with all the documents in place, they still take a lot of time to remit the money to the foreign shareholders account. So that also need to be considered or maybe suggested while giving suggestions
Yes.
to them.
What I'm just sort of making an assumption here, but I think a reasonable assumption, that distribution here means that the liquidator has started the process. If somebody else is taking time because of procedures, then that is not to be counted. It is like, you have to file in court by a certain period limitation, but after that court might take 20 years even to hear your case. That cannot be counted against you. So I would assume that the same reasonable grounds will prevail here. Once you have filed the application with whatever is the authority, in the case of foreign remitters, now if they take 6 months time, they can. You can't do anything. You are ready. You can say, मेरे पास पड़ा हुआ है, बस आप हाँ बोलो निकल जाएगा. I think that would. I don't think, because this is all between us and IBBI. IBBI ultimately is our body, right?
Right.
I mean, our regulator. I'm sure they will understand. when reasons are given. And these are regulations. These are not part of the code. So to that extent, one can say that flexibility is inbuilt in. Haji, Mr. Saragi, you wanted to say something?
No,
Okay, so we have noted down these 2 points that foreign remittance. Yeah, Mr. Sontalia, 1 second. Dr. Rao, Mr. Sontalia wants to say.
Yeah, after
No,
that,
sir, this is actually practical difficulties are coming. In my case, what I observed during my claim period, no claim from income tax department, no other dues were there. But after 6 months, they suddenly send me a claim of 30 years old. Then it took 1 year time to resolve it. Even I have to go up to the principal commissioner of IT, and they say that we do not have any details how this claim has been built up. And finally, I had to reject the claim, but it took nearly more than 1 year time to resolve the matter. So
these things do happen. Yes, we have to accept that. कि अपने देश में ये सब होता है. And it is both ways. Let us not say that ये problems are towards us. We are equally to blame when we do our things. And you just have to read all the disciplinary committee reports of IBBI and others to see what we do or don't do. Okay, Mr. Mittal, you wanted to say something?
I wanted to synthesize.
Mr. Saragi, go ahead.
In one of my case, the PF department started inspection after getting the intimation regarding the, and they had started inspection for the 8 years. So it took 3 months to get the things cleared. Similarly, the income tax department started the proceeding under section 263 for remittance received for the valuation purpose in 2014-15 year, assessment for 2014-15 for that year. So after that we got closed. So it took more than 1.5 years to go get these issues closed. So even the GST department took 2 months time to deregister the company from the GST. So yes. These are the times. Basically, liquidator doesn't want to kill the time in these processes, but his hands are tied in these areas.
I think all these timelines that we are talking of is what we can do, not what somebody else. Again, we have to send the ball from our court to the other court within the timeline. Udhar se kitna time lagta hai? Obviously not in our hands. I am sure no reasonable person would hold it against us. Yeah. Okay. So we have taken note of this point on point number 2.
Sir, I want to share. You please allow me to speak.
Haji, boli.
I just listened. I want to share my thoughts on twofold. One is on this line itself, on the relation period. Another is on practical issues shared by my colleagues, where I can share some suggestions or tips for that actually. So first, if you see on the relation period, date of relation from 6 months to 30 days. Sir, if you go to the chapter 6, relation of assets is there, which includes clearly for the physical assets and any money due from the contributory or any other persons, where the role of the liquidator to realize. So it is talking about the 6 months from the date of relation. So ideally, if the physical assets are there, sale proceeds and other things shall be realized, then distribution should be started. So practically, the time for date of relation is not mentioned, but the time for the distribution from the collection of the relation is the issue. So my suggestion is maybe 30 days, maybe, but that should be the last relation, means whatever the dues to be received to the company, corporate person, from the last date of the relation, for the last relation period, it should be 30 days. That interpretation.
I think, Dr. Rao, that is not the intention. Okay. If you have received money, unless of course it's a meager amount, then obviously nobody will question.
There are a couple of relations.
One second. Let me answer. If you have received money as a liquidator, which is of a reasonable amount, you should not be keeping it with you. That is the point. Okay. Distribute as per the waterfall, right? So if you already have the list of stakeholders, you have already made the list of priority of distribution, you know how much should be given to each, all claims are there. So just go ahead and do it the way we see. Even in normal liquidation, nobody waits till the last period. If a company has 10 blocks of asset and the first one is sold, it is distributed immediately. Of course, there the incentive is that your fee is linked to distribution, so people want to do it faster. Okay, here in voluntary liquidation, that may not necessarily be true. Fees may be only lump sum or whatever, in which case there is not much of an incentive to do things faster. But I think the regulations or code have, I mean, in overall timeline is given, but they have not told how much time you should take for realization. They have said how much time you should take for the final report. And of course, once you realize, you cannot keep that money. I think that is standard. Why should you keep anybody else's money? It's not yours.
Sir,
So
I got a slight different views. Pardon me, actually. See,
no, if it is not your money, how can you keep it?
sir,
Simple. You answer that question.
Account, sir. It is a liquidation account only.
Liquidation account is with you, not with the person.
Correct, sir.
You are not to decide to keep somebody else's money, Dr. Rao. I think your entire argument is not based
I'm not
on
arguing,
logic.
sir. I'm sharing the thought for the purpose of better distribution, because claims, see, whom you will distribute, there are two people. One is stakeholder, another is contributors. Of course, contributor is also part of the stakeholder. See, this just now one our fellow professional told income tax department claim, ESI, PF, suddenly they will come after 3 months or 6 months also. So distributing is a danger.
How does it matter? If they are in one, you pay first. Until one is over, you can't pay two.
So
and income tax is coming at F. So that is, yeah, Mr. Sontalia, please unmute yourself. आप unmute कीजिएगा.
Sir, there are also other practical difficulties where there are only shareholders, stakeholders, and available money is more than your paid up capital. In that case, the surplus amount is your dividend. So until unless you realize the entire amount, you have to pay the dividend tax. So you cannot just distribute until unless you collect the entire amount and ensure that no further collection is possible.
Even then, let us, I mean, example लेते हैं कि भाई आपका 100 रुपए का share capital है, and you have already, let's say in the first tranche you realize 50. So distribute 50. Next one you get 25. Distribute 25. After that you get another 50. Now this time you are getting 25 plus 20.
If there are 500 shareholders, then lot of transactions you have to enter in expenditure also.
भाई लोग करते हैं ना, काम करने के लिए तो रखा है हमें. Okay. So there is no honest logic to keep somebody else's money with you. Simple.
Right.
There has to be.
आजकल तो RTGS system है. You can send 500 लाखों transactions in one day.
Yeah, Mr. Chamadia.
Sir, good afternoon, sir. I have done 2 voluntary liquidations in past 2 years, where we've experienced that the shareholders of the company are basically sitting in Singapore. And as such, before we realize the assets and distribute the proceeds, we need to basically take Reserve Bank of India approval for transferring money outside India. And there is a requirement by Reserve Bank circular for transferring money. 3 points. There is an auditor certificate required that there are no legal disputes in India, number 1. Number 2, income tax NOC is compulsory. And 3, you need to keep sufficient money with you in India, to take care of your legal disputes, etc. Now, the point is, now in a particular case, which I'm going to do right now, one, it's a factory in remote areas of Maharashtra where the directors are actually contemplating that there are going to be, various disputes by laborers. Although the company will pay everything as per the labor laws, etc. But we are pretty sure that somebody will go and file a case in labor court. That's one. Number 2, if that is the case, the chartered accountant certificate will never come. 3, income tax NOC is required. So while I understand that the regulations have done away with the income tax NOC, but because there is a foreign repatriation of funds, income tax NOC is required. So say by 31st March of 2022, if we close, the earliest we can file, get the accounts audited and file the returns only by, say, September or October of next year, which effectively means that this whole 30 days complication will come in. Obviously, we are not going to get NOCs in 30 days and labor disputes won't get resolved so quickly. And hence, if there is a delay, then I am just proposing that there should be a regulation in place that what are the next steps which the IP is supposed to do if there are such delays.
I think practical.
Pranavji, 1 minute. Just because what he has raised is valid for any process. When you are faced with an uncertain situation, what is to be done? Okay, in CIRP and regular liquidation, the answer is usually quite straightforward. Go to the NCLT. Now that answer is not available in voluntary liquidation. So what do you do? Okay, there is no human in the world born till date who can forecast all possible eventualities and make regulations. और अगर हम करने जाएंगे, so the regulations will reach the moon. So these are special circumstances, and I think when such things come, then by exception, you raise it to the next level. In the case of voluntary liquidation, since the AA is not involved at that stage, it will be, I think, IBBI. So उनके पीछे पड़ जाओ and make their life miserable for a change. Okay.
So to continue with the earlier thing, in one of my voluntary liquidation assignments, what happened was the VAT authorities came up with a claim of some 2013-14. Obviously, there were no employees in the company. The directors were not aware. VAT authorities claimed that they had sent the claim to the registered office 2-3 years back, but it came. Nobody was there to receive it. Whatever. Point is, most of the government authorities claim after 30 days or typically or 30 days of timeline, irrespective of you write them letters, don't write them letters. We've been experiencing in CIRP and liquidation book. Two, what happens is typically these claims, sometimes if it's a small amount, nobody minds paying it. But if these are large claims, another problem what happens is liquidator parallelly is disposing of the assets and the proceeds keep coming to the liquidator. But unfortunately, because there is a claim which is supposed to be adjudicated, I understand you have to reject the claim or approve the claim. But in voluntary liquidation, what happens is the directors are still sitting with you and they don't want you to accept any claim so easily, because obviously one liquidator is not aware why this claim is, and two, the files, records, etc., it's all in question mark because no employees are there. So typically what we have done is we hire consultants, basically specialist chartered accountants who would go to income tax office or GST office and settle these claims. That whole process itself takes a lot of time. So even if we are not talking about a foreign shareholder where money has to go outside India, there would be such claims. And then what do you do if the claims come at a later date before the distribution has actually happened? Because it's a voluntary liquidation at the end of the day. So there is the liquidator supposed to satisfy.
Yeah, valid point. I've just made a note because it is very important. We will come to that.
Sir, I will add to.
One second, Arunji, 1 minute. Himanshu is waiting for some time. Let him sequence में जाएं. Himanshu Kapadia.
Thank you, Ganti Sahab. I actually my question, which is very very pertinent and practical. The same my predecessor said. Basically, what happens in India, typically we have experienced that within the period, no statutory authority lodging the claim. And after distribution, if they start lodging the claim, what would be the fate of the liquidator? Because we should have some kind of a regulations where, said that once the 3 notices has gone, and if the statutory authority has not come forward, thereafter, just like other creditors, even any of the statutory authorities' claim will not be accepted. Otherwise,
I made a note of that. Yeah, because very important point. We will address that. Arunji, anything different?
Otherwise, liquidator will always be in.
Yes. नहीं. इसका जवाब जरूर मिलेगा. अभी मिलेगा. Arunji. कुछ
Yes,
है?
मेरे को सर 2 पॉइंट है. एक तो I'll also on the same point जो भी हिमांशु जी ने कहा, ये बहुत ही इंपॉर्टेंट पॉइंट है डिस्ट्रीब्यूशन के लिए. I'll not go into detail. Second, which Krishna has added in whenever any foreign remittance is there, the bank's or RBI requirement is income tax NOC. I would like to suggest that IBBI should also write something to RBI when income tax NOC is now get rid of, then banks should not actually ask for that. The requirement of them to ask NOC is actually nothing. They just need to ensure. I know that in their checklist, they only way ask a certificate from a CA that appropriate TDS have been deducted. Everything they always ask for. Then why NOC is required? So something should be done, because when government talks about early exit, so actually I know that in their mind the early exit is for the foreign investors also. Easy to enter, easy to exit, kind of a thing. So such kind of some suggestion should go to RBI that you also get rid of this as a part of your checklist for doing so.
Yeah.
And I'll just go, sir, to the background of this amended regulation. Even in this amended regulation, because we all face a lot of issues after commencing the liquidation, the IBBI has proposed that the liquidator should do the appropriate due diligence before starting any assignments. If there are any issues, it should be resolved first before actually commencing the liquidation. Because if we'll face the issues post commencement, obviously those will take time unless some contingent things may come later. But those are also, I'm not very happy with those comments. Because loss is in only two situations you can start the liquidation: when there is no default and when you are solvent. If you are solvent company, even if there are realization from government departments or debtors or receivables or immovable properties are yet to be sold, it's not that somebody has to clean up everything then start the liquidation. That is not the spirit of the law. So that should not be the spirit of the amendment also.
Yes, important point. We'll answer. Devang.
And
maybe, sir, I'd put the cat amongst the pigeon. We are all talking about income tax NOC, but if someone has to, maybe someone spoke of repatriation in Singapore. If someone has to repatriate to a country outside, the authorized dealer refers to a circular which is pre-IBC, which is in the period of January 2016. And which is in accordance with Companies Act 1956, not even Companies Act 2013. It is virtually impossible to comply with that circular. And that circular is by Reserve Bank of India. Maybe Pranav Bhai could help me. He's an expert on this issue. He could help us on that. And this has been brought to the notice of even the regulators and Reserve Bank of India. Yet nothing seems to have proceeded on this. Maybe if it is in process at high level, we are not aware of the same. On ground, the things are not proceeding further.
Yeah, I completely agree. The authorized dealers, which is a bank, has a duty to ensure that whatever remittance they are receiving or making outside, it falls within the FEMA regulations. So they are not completely wrong in asking the ITNOC. They are not completely wrong in asking all the earlier FCGPR or FCTRS. There are sometimes delays happening because they ask all FCGPR, all FCTRS. So there are a lot of situations which causes the delays, and therefore, this 30 days and all those things are practically difficult, especially this foreign remittance.
Too strict.
Right. Okay. Fine. I think we have debated enough on this, but just I want to make a comment in passing, not that it is here. From what I understand of the code and regulations, a voluntary liquidation is for liquidation similar to what a PPIRP is for CIR, which means that the entire onus and responsibility of giving total information and a relatively clean slate is that upon the management. The liquidator is not supposed to come with a jhadu here just to oversee the process, because a third party independent person is required. So in the case of where you are getting hit by these unexpected claims, old claims, etc., it basically means that the directors have not done what they are supposed to do. And really speaking, I mean, I don't know whether it's the right thing to do in all cases, but the liquidator should basically ask for that voluntary liquidation to be reversed till the cleanup has been done, because ये उनका काम है, आपका नहीं है. You're not supposed to be hit in a voluntary liquidation like a normal CIRP, because here everybody has to be paid in full. There cannot be any waiver, there cannot be any write-off, and the company management is supposed to know and make that, the IM in this case basically is what the company makes. So how can a voluntary liquidator be hit with such thing? That means the management has not initiated in the right manner or with the right objective. Okay, just that is a comment in passing. All other suggestions are noted. And shall we move to the next one? Okay. Okay. Now this is about final report. It is emanating from the previous one. Okay, they are all connected. That again, there are two tracks, the fast track and the slow track, or the regular track, not slow track. The fast track is where there are no creditor claims, which means except for shareholders, there are no claims as on the date on which the liquidation process starts. And the other one is where there are creditor claims, but the company is solvent and can meet them. Okay. So the proposal is that in the case scenario 1, no creditor claim, you should submit your final report in 90 days as a liquidator. And in the scenario 2, it is 3 times that, 270 days. Okay. So comments.
Sir, may I start?
Yes.
Sorry if you. Sir, first of all, I even couldn't understand the logic of IBBI to amend this regulation on the principle of creditor claim or no creditor claim. Anyway, if assuming there is a creditor claim, so the position of creditor claim will anyway be sorted out once, because any stakeholder has to file claim within 30 days after the public announcement. 30 days over, 45 days over, claim admitted. Once the claim is admitted or rejected, whatever be the case, if it is admitted and money is there, it has to be distributed also. So as a flow wise, 45 days from the commencement, claims admitted, then it has to be distributed within 30 days. So say that means 45 plus say 30, 75 days. So liquidator can, if liquidator can distribute it to the shareholder, can distribute it to the creditor also. So even if there is a creditor claim, why 270 days? This is one point. Secondly, anyway, I'm not happy with 90 days in any situation, because that's we have already deliberated in detail that 90 days seems to be impractical in all scenario. Yeah. But the distinction based upon creditor, no creditor claim, at the moment there is a creditor claim, then again what we need to do, say there are 10 creditors. We have to complete our job of preparation of list of stakeholder within 75 days. If there is a creditor claim, then 75 days is the maximum time for preparation of list. So once liquidation list of stakeholder is prepared and we have the money, we can distribute it another 15 days to the creditors also. So this distinction, I believe there is no substantiate logic to create, and that too with such a big distinction. Then it could have been 90 to just 120. Although I'm not advocating 120, I just want to be even 2 to 70 is less. So if anyone can say what would be the logic of such kind of a distinction?
Yeah, the logic is basically that, okay, the logic is for the majority cases, not the exceptional cases. Really speaking, I think in all the regulations, what is the mechanism when you have an exception situation is not there. Probably that is what we need more than anything else, where you can go to somebody and justify seeking more time. In the normal case, AA was always there, one could go there and get whatever, exclusion, extension, jobi, whatever is allowed. In the voluntary liquidation, obviously that is not present. So maybe what we are looking at is that, okay, put all these timelines, but if somebody has a problem, then there should be, if there is an issue, there should be a relief mechanism available, right? That is, I think that should take care of all such issues.
Yeah.
Right.
Ravi, unfortunately, what is happening, as you said, that the regulations are made for the majority of cases, and they don't, of course, they can't foresee all the situation. But unfortunately, in voluntary liquidation, majority of cases are due to all this non-compliance or
Yes.
non-availability. So actually, it is actually majority of cases are not falling under this. All are having some issues. That's the majority of cases.
Yeah, the board would say back and say that on the first day when you know what you are getting into, you should say this is you are not yet ready for this. आपका eligibility ही नहीं है voluntary के लिए. पहले अपने आप को sort
No,
out
sir. No, sir. I'd like to object here. The eligibility under 659 is just two. One is that company is solvent and not in default, and not in default of payment to creditors.
So when you say solvent, see, it also says that they should know about the creditors. Okay.
No,
that is
that
is the presumption. See, if you want it to be written down, they will do it tomorrow. Okay. 5 minutes लगता है लिखने के लिए. But this is the actual presumption. Let us understand that the presumption is that the company knows everything about itself. It is a running company. It is a solvent company. I mean, running in the sense, it may have stopped operation, but it is supposed to know. And when you are going for voluntary and you are required to meet all your liabilities, you must first know what your liabilities are, right? तो ये ही नहीं मालूम है और मुझे खुद ही करना है. I think मुझे लगता है थोड़ा बहुत ये चलबे ना. हाँ जी, कृष्ण चमाड़िया जी बोलिए.
Sir, 3 points in a very notable way and in most honorable way. So we recently, most of our chartered accountants have seen that income tax is just randomly shooting notices for 2013-14 assessment years. Now, no way on earth a good management, bad management, or management going into voluntary liquidation will come to you. Whether your offices are there, not there, it doesn't matter. In fact, I as an individual have also received certain notices. And, we are all shocked why these notices have come. They are just simply wanting to reopen the assessment. So
no, 5-year limitation is coming to an end.
Sir, so we know what happens. So that is number one, sir. Number two, sir, regarding this 90 days, it is linked to creditors. What if there are immovable properties and management has made up their mind that the property should be sold at a particular price? You do your two valuers report and now say it's a factory land. There are some disputes which have come in. Then how can somebody link the final report to 90 days for creditors? Then
that's what my issue is.
What happens to the immovable property? That means, is the liquidator forced to sell all the, assuming there are no claims, then I have to sell immovable property at whatever price? I mean, that itself is incorrect. I mean, how do you link final report has to be submitted only after the process is completed? If you put 9 and if you don't complete in 90 days or 270 days, as the case may be, what happens then? Do I go to NCLT for taking an extension? So, this linking it with the creditors itself is incorrect. So,
fair enough.
It has to link with maybe like other members have added that if any claims are received, say after statutory period, some other linking or some assets are yet to be realized, then period can be extended. Creditor claim linking seems to be illogical because what happens is yesterday only I received a call for a fresh case of voluntary liquidation. So they were saying no creditor. Rather, I said them, okay, you should have one creditor at least so that I'll have 270 days. So people then will plan. People will plan before commencement.
True.
To assets rather than.
Mr. Vasudevan, yeah, go ahead.
But actually, it should be linked to assets rather than claims, as already said by Mr. Arun. If we have money, we can easily settle the creditors. We need not have 270 days. So immediately, we can settle it. So it should be linked to assets rather than linked to claims.
Valid point. Liabilities can be settled if you have the asset and the money. Agree.
Can go only if you have money in hand.
Sir, just one more point, if it just came to my mind while discussions.
Yeah.
Sir, if we put, say, a very small period, like 90 days or something like that, and the liquidator is a fresh guy, irrespective of the type of due diligence he does, there could be something in the company which he'll never come to. Now, if the speed at which we close this liquidation process, and say I submit a final report and there is one more suggestion that not to go to NCLT and the liquidator himself can dissolve the company. There is another discussion which is going on. People might use this clause to actually defraud the, because you will be able to close the process so fast that nobody will even realize that, the process is over and the guys have disappeared. So we are themselves. So, this original period of 1 year sounds very reasonable. What is the rush to close the process in 90 or 270 days? It's finally voluntary liquidation. There are no deaths. There is no public involved. All the company is anyway solvent to pay off all the debts. So whether the company stays for additional 180 days or additional 90 days after 270 days, how does it matter? Nobody is actually at a loss here.
Only shareholders are the one who will get the money in the last, and they are the affected party, nobody else.
Anyways, and they are okay with the whole process.
So actually the whole changes are suggested from the perspective of maybe the economy, from the country's positioning in timeline of exit kind of a thing.
No, but if there is no money to be distributed to the shareholders, if all the guys are paid, then even if the company, then it's for the liquidator to quickly close the company. What will he do with the company? Because if he keeps the company live, he has to basically do all the compliances like filing income tax returns, etc. And typically in such assignments, the fees are fixed. It's not linked to any performance or anything.
Definitely.
So
the more time liquidator will take.
Keep the company alive, actually.
Right. Very, very, very valid. Yes, Vikram.
Yeah. So my limited point was that I have handled 3-4 voluntary liquidation assignments, and in most of the assignments, what we have noticed that practically the company has never started any business. The company has no assets and no liabilities, and typically it's a defunct company, never actually started anything, and the purpose of which the company was incorporated never materialized. And now finally the promoters believe that the best thing to do is to liquidate the company. Now the point is, if you continue the process for 270 days and 360 days, it actually is a wastage of time for everyone, number one. Number two, if suppose you are able to see from last 3 years that the company has no liabilities, then there is a question of a new liability cropping up suddenly because you have initiated a process of liquidation. And if suppose there are no liabilities in the company for last 3 years and somebody files a claim, I think the liquidator will also be not be in a position to admit the claims. So I think 90 days is a good enough time for voluntary liquidation, because for the simple reason that the very premise of the discussion is that the company and the directors are giving an affidavit in the very initial period that it is not being liquidated to defraud any person. So if in case they are defrauding, then we have a provisions in under the other provisions of law. It's a perjury, and he can be prosecuted.
Right, fair enough. Valid points. Any other comment? Okay, I think we have discussed this enough. We have noted down some of these points. We'll go to the last one. Mr. Sivalingam, you want to say anything?
Actually, if the company has only the cash in the bank,
one second, Mr. Sivalingam, you want to say something? Okay. Go ahead, Mr. Vasudev.
Yeah, if the company is having only the liquid funds in the bank account, it can be distributed very well within 90 days. Or we need not even at present we have a 360 days timeline, 1 year timeline. More than 10 cases, in almost 3 or 4 cases, it was having only bank account. I could able to distribute less than 60 days. We have contribution and we have submitted the final report in 90 days itself. Everything in the present scenario itself, we can do it. But
I think it is your example that has been taken by IBBI. If Mr. Vasudevan can do it, everybody can do it.
Yes, actually, earlier also, Mr. Saini discussed with me regarding this last regarding this thing while framing the regulations, changing the regulations. But the point is, whenever the company is having any assets, then the time should be given. It should not be linked to creditors, rather than it should be linked to assets, which has to be realized.
Yes, fair enough. I think very valid point. Anything else? Okay.
So my suggestion is that this 90 days and 270 days based on creditor or no creditor, 270 should be applied to all other cases, like where some assessments are pending, or when that there are some non-compliances, but you don't know whether liability is there or not. You cannot quantify the liability. So until you make that compliance, it should fall into 270 days.
Very okay. Okay. Right. We will go to the last point of today. This is relatively simple. Okay. This is the introduction of a compliance certificate, like it is done in regular liquidation or CIRP, and primarily to aid the adjudicating authority so that they can see it in that one snapshot, what all has been done, what compliances have been met, etc. The discussion paper says that in the absence of such a thing, different benches have been asking, maybe some of them, not all of them, to give a report of such nature, but the formatting is not standardized. Now the objective is basically to standardize a format so that across the nation, one type of format will be followed by all the adjudicating authority benches. Okay. So I think probably nothing to discuss here. This is welcome step, okay, to add to the speed of operation. And Mr. Gupta ji, 1 minute. I think Ashok Kumar Gupta first. Yes.
I can add before.
Am I audible?
Yes, yes, go ahead.
In the compliance certificate, there are two issues. One thing is that this is duty of the voluntary liquidator to take value of the assets in the regulation 31, I think. There is no such clarification about the whether if no valuation was conducted by the management of the company, so whether he will appoint some valuer. This is first. And second thing about okay, the winding up process when voluntary winding up undertaken by the management of the company by the directors. Sometimes it is difficult to know whether these directors are competent to do something in the future, because they undertake the company solvent, and otherwise we will pay the liability of the company if any remain there. That means the contribution comes from them. So this undertaking is very difficult to assess whether they are competent to pay, because in one case when we did due diligence, we found that the director doesn't know about company. Promoters are some others, and after 4 or 5 years or some income tax assessment open or some demand will be raised, then how we approach those directors to find? That is a problem. So that's why here is we understand. And third thing is that one compliance is necessary, that is the article of association, because sometimes winding up clause under article mentions certain conditions which has to be fulfilled, and this is duty of the voluntary liquidator to make sure that those compliances are there, like some permission from the majority of the shareholders or some particular shareholders. So those things are still not addressed. And the fourth thing is the no due certificate. If company was working since last let's say 10-15 years, might be they have customer registration, their DGFT, PCG matters were there, and they yet not complied or fulfill obligation. So how the voluntary liquidator take care of those issues? Because at present, when they submitted up the balance sheet to me, might be showing only less assets and less liabilities or clean balance sheet. But these liabilities are there and the hidden liabilities. That's why the NOC concept is very important. Either should voluntary liquidator send 60-day notice to this department and make sure whether if they should reply within 60 days time, otherwise he is free. Now, otherwise what will happen? Whenever any document or letter comes from the department, it will go to the voluntary liquidator home or registered office. Even in 2 cases of liquidation, we are still giving the answer to the income tax department. The company is dissolved, wind up, but still we are facing. And the last thing is that that's why we can say one insertion is required in the regulation, the closure of the registration. GST registration closed, service tax registration closed, TDS should be closed. Otherwise, it will be continued process. So if we put like closure of the registration with the Factory Act, under Factory Act, under PF, under ESI, under GST. This is necessary for the voluntary liquidator. So that the best practices are missing here somewhere. We should be incorporated.
Best practices are never part of code or regulation. They are practice. Okay. So itna to samajhna chahiye, and that is part of what the profession should teach each other. Each one of us with our experience sharing our different forums and all that. As I said a little while earlier, हर चीज regulation में नहीं हो सकता. It is not possible. Regulations tell you
the regulation, but when IBBI issues a circular that ki income no.
See, IBBI can't do everything. वो IBBI नहीं हो सकता.
If IBBI issues circular that ki no objection is not required from the income tax department.
Because majority of IPs until date were saying that is our only problem. वो solve कर दो, सब हो जाएगा. Now once that is solved, other set of people come and say no, that is not the problem. That is the solution. So somewhere people have to make up their mind. Is that a problem or is that a solution? And all the comments about, where the directors have given incomplete information, deliberate or otherwise, or not competent enough to do it, that is not a fit case for voluntary liquidation, sir. Just because, if the code will say solvency and no default, what is implied is that it is also good intention, right intention. If the intent is doubtful, that is not to be written anywhere. That is understood law, standard law. Anything to be done which is of fraudulent intention is void in law ab initio. वो इसमें बोलने की जरूरत नहीं है.
Okay, sir. Then
Mr. Badodia. हाँ जी आपका note.
Sir, yes sir, I agree with you because in my case also and this case of voluntary liquidations, people are deciding after proper deliberation whether to go for voluntary liquidation or not. There has to be, I must say that there has to be detailed discussion before proceeding. In my case, people approached me for voluntary liquidation. I analyzed their balance sheet and I told them that you cannot go for voluntary liquidation. So I agree with you that there has to be a situation where on day one, everything should be crystallized and then decided whether to go for voluntary liquidation or not. If there is any doubt, then definitely it is not a fit case for voluntary. I think what we are discussing, where we just start voluntary liquidation just immediately and then think of various types of problems coming up. So I think the suggestions are very good and it is keeping in view the situation where things are almost settled. And there is a need for expediting and closure of the process fast. So that is what, sir, I wanted to say.
Thank you, Vadavedi. Yes. I think we have covered everything. I will just briefly recapitulate some of the suggestions which have come. Okay. The first one was the common problem, not just in voluntary, but otherwise, that liquidation account not being opened by banks in time. What is the solution for this? Yes, this requires intervention by the regulator. Wherever appropriate, it is for them. They have to help us out. Agreed. Then second one was where if the shareholders are all foreign, or maybe even where some creditors are, how do you meet all the requirements of RBI as per extent circular? Have the circular become, let us say, obsolete? Does it need to be modified? Again, one would require intervention by the board to take care of it. The third point was that if the liquidator is faced with past claims which are not clear in the balance sheet or information provided, or even if they are there but not very, not enough to understand, and things can take time to come, how to handle that situation, that we have discussed. But of course here I don't think regulator has any role to play. It is for the person taking up the assignment to specifically ask if there is anything, please tell now, any likelihood, and then any potential claim is of course the creditor, not the no claim route, it will be the regular route. Then we talk the final report, and the consensus was that 90 days cannot be on the basis of no claims. It should be based on no assets. because claims is okay. That's not the issue. It is the asset which might take time to sell. So or it could be one of the two, any one of these two criteria, or both, something of that. So, but asset not there or there will make a difference in the amount of time that the liquidator will require. Definitely, perfectly taken. Compliance certificate, yes, we discussed that. So this is largely what we discussed. Okay, I think we have 1 hour 10 minutes. We are okay now. हाँ विक्रम जी, हिमांशु जी, आपको कुछ बोलना है फाइनल?
I said that there has to be some relief for the liquidator, that if the liquidator distributing the estate, all the assets as per the waterfall mechanism, and in that case subsequently if there is statutory authority come forward with any claim, then liquidator should be absolved from all the liabilities or something like that, because this is very important in case of the voluntary liquidation, where within short period we distribute our money with the stakeholders, and subsequently things comes and liquidator will unnecessarily put into a difficult situation.
I think many of you would be familiar with this, that in case of a private company, the Income Tax Act itself empowers the department to go after the directors themselves if there is a shortfall in collection of tax in case of a winding up or liquidation. So one of the things as a best practice, maybe because this doesn't have to be in the regulation, is that you seek a affidavit as well as what would you call that? An undertaking by the directors.
Declaration of solvency and affidavit. Yeah.
And if the directors are not necessarily, what do you say? If they are dummy directors, so to say, then the majority shareholder or whatever, that if there is any such issue, that they will be liable and not the liquidator. Something which sort of indemnifying the liquidator from such. I think an indemnity bond is something which we can introduce as a practice. It doesn't have to be, everything doesn't have to be in the regulation. But dam hona chahiye मांगने के लिए कि you give it to me, otherwise I don't start.
I always take in my each assignment.
I think in the regulation there should be a form for the undertaking by the directors themselves, that in such so and so situation they need to undertake and for all the future liabilities. That should be the part of the regulation itself.
Right. Okay. So
that undertaking is there, but issue is that it is given by the director. Where director may be kind of dummy or something. So that's why the majority shareholder should be involved in this practice.
By lifting the corporate veil is a power only to the judiciary. Okay, we can't do that.
Right.
But sir, our suggestion is going to lawmaker committee for making the law.
No, they can't do it because corporate veil lifting. See, otherwise you are challenging the concept of a limited liability company. Oh, hota nahi hai. Okay.
One more practical thing is, just now we are linking the CERP thing. Whenever the CERP is initiated, immediately MCA, it's appearing in the MCA portal also in the master data. Likewise, voluntary liquidation also we can do that. IBBI can initiate that.
Is it not there now?
Now it's not there, sir.
Achha, not a requirement, huh?
But sir, no sir. We have to chase ROC to change the status, and
no.
takes.
No. Okay. Just to clarify, people who don't know this, ROC does not change the status on its own.
That's what
Okay. Once you file INC 28, that intimation is sent by them in a batch process basis to IBBI.
Yes, correct.
And IBBI has to inform them to change. Now, IBBI also takes time.
Yeah.
It's not only ROC.
But
so
sir,
I have seen that IBBI has once taken more than a month, sometimes 2 months, because person was handling it was not available. This is of course happened during that peak second wave. So ye hota hai. So it's not entirely MCA.
But sir, in case of voluntary liquidation,
because in certain cases I have faced a situation wherein bank doesn't open the bank account and asking for the status.
Yes.
So
yes.
We could not follow the timelines if such happens in future also.
Yeah,
sir,
agreed,
in such
but,
cases, but sir, just to add,
No, इनका जो कहना है, and I would want to support that by saying that if you have done what you are supposed to do, and the other side has not done it, then you can't be held responsible for that.
But sir, what she said that the bank don't open.
Left,
Yeah, but obviously you can't start.
How
If
should
that is,
we make it?
no, very rightly, a bank has to know that you are under liquidation. Now the question is that a bank asking for status change in ROC is not a requirement under law.
Correct.
It is an internal requirement.
Yes,
definitely.
But so that is wrong on the part of the bank.
Yes.
Definitely wrong.
They should definitely ask for the copy of the order. They cannot ask change in status of ROC.
Absolutely.
But sir, in the case of opening of bank account, there is no order for the NCLT. There is only the resolution. Based on the resolution,
That is the law. The law says so.
They don't open the account.
वो common
Lots
problem.
of problems
Resolution and
with the
public
account.
announcement. Public announcement is there, no?
No, they don't consider this public announcement. They ask for the status from the ROC itself.
Yes, I agree. But and that's a common problem. In fact, that is why we took it up as point number 1, that opening of a bank account is still a nightmare after 5 years of IBC.
Yeah.
Exactly.
It is still a nightmare.
Yeah.
Agree.
Now, only one thing.
Once the MCA data is changed, that at least we can show that to the banker.
I agree. But in the MCA change, also follow up with IBBI helps, huh?
Sir, but sir, in case of voluntary liquidation, no INC 28 is to be filed with ROC. It is just so there is no question.
EGM, because EGM happened, na, so EGM filed.
No, so that means MGT 14 filed, not INC 28.
INC 28 at the end.
At the end.
Order is passed.
So what I experienced in voluntary liquidation, ROC changed the master data based upon request of liquidator as an application or by email we sent to them, along with copy of SR, copy of public announcement, copy of name reflecting on the IBBI website. But there is no process which we follow in CIRP, because in CIRP there is an NC order we file with INC 28, which is not the case here. So maybe IBBI can write to our MCA that in case of voluntary liquidation, acknowledge the resolution and change the master data from active to under liquidation.
Yes.
Because if the status doesn't get changed.
I think some notification given by the MCA that
Yes,
IBBI will normally use to send the ROC all the status of commercial CRP.
Yeah, IBBI is supposed to send.
So this process already started.
Maybe for voluntary liquidation, it can be expedited. That suggestion you can make.
Yeah, IBBI का है. It's a batch
जो काम वो नहीं
processing.
कर रहे हैं वो भी IBBI करेगा. वही सर का कहना है ना कि सब काम RBI पे डाल दो.
Yes. Okay, so
right, sir. Thank you.
We have 1 hour 20 minutes. I think we have taken sufficient time. Nitin, over to you. We can close.
Thank you, Ganti sir.
So thank you, Ganti sir. Thank you, everyone. We are grateful to you for having taken out time, shared your inputs on this discussion paper. We shall collate all your suggestions and we will forward it to IBBI. So with that, thanks to everyone, and we can, so we can close it now.
Yeah, thank you all.
Thank you.
Thank you.
Thanks.